Very good morning to all of you. You're watching Bloomberg Quint and this is Indian Open. We're heading straight into the festive season, but a day's work before that. Good morning, everyone.
Good morning, everybody. This is Indian Open, as Ira said, and Ira, I'm really looking forward to the Secret Santa today. Something tells me my Secret Santa is going to give me a really good gift.
Really?
Yeah.
We'll find out and we will update our viewers on Monday if he gets that gift or not. For now, it's the headlines. Accenture ups the lower end of its full-year guidance after revenues grew 10% in the quarter ended November. Reliance Infra hopes to become a debt-free company by March next year after it receives over 13,000 crore for its Mumbai power business from Adani Transmission. India and 127 other nations vote against the US decision to recognize Jerusalem as Israel's capital in the UN General Assembly. And we'll get you other stories as well, including the fact that the Reserve Bank of India has finally called a bottom on the bad loan problem. But over to you, Neeraj, first for the trade setup.
Yeah, well, the trade setup, no surprises there, Ira. It looks to be a flat start to the trading day today, and that's not surprising, really. We've had this now for a while now, the last 3 or 4 sessions. Had it not been for the election verdict, this week could well have turned out to be a really, really flat week, and there wouldn't have been any surprises there. The rest of the world, too, pretty much on a holiday, and those who are not holiday are really not trading too well. You may have a surprise, by the way, in the last week. I remember the year before or the year before that, the last week was fairly active. But suffice to say, today we'll not have that bit of activity. India VIX 2 has stayed low after the election verdict is out of the system. So crashed from a high of 15.5 to 12, and it's been staying at those levels. So no changes out there. For today's perspective, I think pharma and IT, and for the right reasons, will be in focus. While the markets may remain very, very flat, watch out for Nifty IT today. Watch out for pharma too. It started to show a bit of a spark. Let's wait and watch if that continues in the session today. Stocks to watch. There are a clutch of them. I've chosen 4 pockets which I think are the most important ones to watch out for amidst some noises that keep on happening. It's Christmas time.
I think it's balloons popping.
Balloons popping, yes, indeed. Could there be balloons popping for the IT space? Not quite. On the contrary, we might actually have a fairly decent run in today's session as well. Some uptick was seen the last couple of days, and Accenture has delivered a very strong quarter. Guidance has been raised, and we'll tell you why. Indian IT kind of tails what Accenture does on the consulting business, and that might just augur well for the IT stocks in today's session as well. I'm only talking about today. It's a good set of numbers, may impact the stocks in the medium term as well. But I'm talking about today, we might have a bit of an uptick in the IT stocks. Some negative news for AI engineering. Brazil imposes provisional anti-dumping duty on products from India. AIA is one of those which gives those products grinding bodies, which AI manufacturers, some other companies manufacture as well. And this company will have to pay an anti-dumping duty of about $359 per ton. This should be big. It should be material for AI engineering as well. We'll get to the bottom of that a bit later on in the show. But keep in mind, this stock will be in focus today. Canfin Homes was up and about in trade yesterday. Lots of rumors. There was a brokerage note which said that HDFC is looking to buy into an asset. Canfin Homes might be on its way out, so maybe there could be a merger there or there could be an acquisition there. That's what one of the notes suggested. But irrespective of that, Canara Bank plans to sell about 4% stake in Canfin Homes, and that should keep Canfin Homes more in the focus today. And lastly, Whirlpool. Now, Haitong is not necessarily a really large brokerage note which will evoke a 5, 10, 15% reaction, but they make some fairly important points, including the fact that for Whirlpool individually, the cycle may reverse because of higher competition and commodity stock prices moving up as well. They've projected a 36% downside for Whirlpool. Let's wait and watch if this one reacts. White good companies have been on a roll the last few days. Let's see if Whirlpool comes off a little bit from those near 52-week high levels that it is trading at.
All right, that's the trade setup. Let's tell you what we're debating and discussing on First Word this morning. We'll pick up in greater detail on Accenture. Should Indian companies take heart from Accenture's performance in the last quarter? We'll get you that analysis with Agam. We'll look at the deal between Reliance Infra and Adani Transmission, except we look at it from Adani Transmission's point of view. We know what it does to Reliance Infra. What does it do to Adani Transmission? We will debate that. Fine print of the Reserve Bank of India's financial stability report. We finally have some good news in there. We'll get you the details. details, and nifty stocks that have managed to beat analyst estimates and those that haven't been so lucky. That data analysis coming up as well. But let's get to Accenture first. They've reported a strong set of numbers for the quarter ended November 2017. Does this indicate better times ahead for the Indian IT sector? Agam Vakil is standing by with the details and the analysis. Agam.
Sure, Ira. I'm going to start off with how Accenture has done for the quarter ended November 2017. With respect to growth, we've seen about 10% growth year on year in constant currency terms. Reported revenues have, of course, moved up as much as 11%. What's done well, and of course, let's not forget that not only has Accenture beaten its revenues with respect to expectations, but also it's higher than its upper end of the guidance of around 8%. This also means that the company has revised its lower end of the guidance upwards to 6% from 5%. What's really worked for this particular quarter? Well, application services operations, which have driven growth, and they've also started seeing an improvement in strategy and consultancies. Moving in, what does this mean for Indian IT companies? What Accenture has seen in this particular quarter is, some starting of industrialization of digital services, which means digital services seeing a larger scale. And they've also seen acceleration in the US markets and as well as financial services. So who stands to benefit from this? Of course, it will be Infosys, Tata Consulting Services and Cognizant. The other area in which Accenture has also done well is in enterprise resource planning and apps. And again, this is where Infosys and HCL Technologies stands to benefit. Of course, CLSA in its note does suggest that while Accenture has done well, it could be at the expense of share from the Indian IT space. But for now, things in the broader view look very good for the Indian IT, at least as far as this particular quarter is concerned.
Agam, stay on. I don't know if you have a comment out here to make or no, but I was reading this Morgan Stanley note as well, and they state the obvious, Ira, which is that if you look at the last 3 years, not really the last 5 years, maybe Agam has a better handle there, but the last 2 or 3 years, the revenue growth for Indian IT vendors trends more in line with Accenture's outsourcing revenue growth. And if you strictly look at the last 2 or 3 years, it's almost been neck to neck, so to say. So with these results and the fact that their outsourcing revenue growth was steady, 9% YOY in constant currency terms, QOQ also, I don't think there have been any disappointments. So at least it shows stability in the outsourcing revenue bit. And then what each company does on a digital front is their own baby, really. Some companies have managed to do it really well. Some companies quite haven't, or maybe are getting there. So it will probably depend on to each company their own. But broadly, I think these numbers and what Morgan Stanley says is that because Indian IT vendors kind of trend or trail Accenture's revenue growth numbers, this should, on the outsourcing front, augur well for almost all of the companies. So that's one small benefit. Agam, I don't know if you've got some further analysis on this, but at least the Morgan Stanley note made this very interesting point, which I thought was important to highlight.
Right, Neeraj, that very Morgan Stanley note also suggests that over the past couple of quarters, the correlation of the performance of Accenture is largely in line with the Indian IT companies as well. So this does mean that, should we see an improvement in the US and the financial markets as indicated by Accenture, do remember that the month of December is very critical because the furloughs in the month of December are also quite a lot. And because Accenture ends its quarter in November and a lot of the Indian IT companies end their quarter in December, that could make a little bit of a difference in terms of, running that correlation neck to neck.
Agam, just one small follow-up. What's been the commentary from the Indian IT majors on North America? Because Accenture has managed to show an uptick in the NA region for the last 2 quarters. I mean, their last 2 reported quarters. What's been the commentary from whichever one you remember on the North American region?
Not the most encouraging, Neeraj, though all the managements have suggested that there has been an uptick, but it's not up to the mark. It's the acceleration hasn't been there in the way that it could make a substantial difference. But again, there very little has been said about what's happened in the 3rd quarter for a lot of these Indian IT companies, and maybe this could be a change for that. We'll just have to wait and watch for that one.
Well, maybe we'll try and connect with one of the managements as well. Thanks a lot for Agam for putting that into perspective. So Accenture numbers pretty good, and that augurs well for Indian IT. Remember, yesterday we were making this point that rupee depreciation or rupee appreciation need not augur poorly for Indian IT companies. In fact, Nifty IT manages to do very well as a stock performance during that time. maybe this just adds a bit of an icing on the cake as well. Let's wait and watch if there is a cake to be had or no. But I tell you what, moving on to the other piece, and as Ida said in the headlines as well, that this Adani Reliance Infra deal done. Now, we all know what it does for Reliance Infra. It gets them a lot of cash in order to repay the debt that they have on the books. On a standalone basis, Reliance Infra becomes net cash positive, and maybe which is why the stock rallied about 8%. But what did really well, despite being extremely expensive, is Adani Transmission. And just thought we should highlight what this deal means for Adani Transmission. Now, first things first, this stock has rallied 5x in the current calendar. Not 1x, not 2x, not 3x, 5x. It's rallied from lower levels about 40, 45 odd, all the way to 225. And despite being extremely expensive on a YTD basis, despite being extremely expensive, this stock continues to find favor. Now, why is that so? One, the news yesterday, they're going to acquire the integrated business of Reliance Infra. So this acquisition marks Adani Transmission's foray into the distribution sector. Hitherto, they have been in the EPC business, which is making the transmission grids, and in the business of transmission per se, but this marks their foray into the distribution sector. And they've mentioned in the press release that they will look at more organic or inorganic opportunities in the distribution sector. So this adds one substantial piece, and the management says they want to add that piece as well. So it's kind of a whole chain. You're doing a bit of a forward integration into areas that you already have expertise about. Now, bring up that chart. There's one chart that I want to bring up, and it shows the kind of bids that different companies have made in the last 2 or 3 years in this distribution bids. And you will see that Adani's share has been woefully low because they have been shying away from bidding out of the regulatory space. Now they'll start doing that, and that means that there will be sizable size of assets that they can actually pick up. What are the triggers for Adani Transmission? Well, there's a large domestic transmission opportunity. Irrespective of what they do on distribution, there is a large domestic transmission opportunity. Some people peg the numbers as high as 2 trillion, and which is a substantially high opportunity for almost any company to bet onto. Their credit profile is robust due to by issue of various masala bonds that they did and otherwise. They have saved almost 150 basis points in credit cost in calendar year 17 for a business which is highly indebted. The nature of the business is highly indebted. 100 basis points is not small. And they believe, I mean, they've shown that in the past by getting in GMR's assets, Reliance Infra's other assets, and using operating leverage to their benefit, and therefore the aggressive growth will drive economies of scale for Adani Transmission. But I remain skeptical of one thing, and brokerages remain skeptical. Who am I to be skeptical? But brokerages remain skeptical of the kind of valuations that this is trading at. FY18 may show a bit of a bump up as well, but FY19 revenues expected to be about 4,000 odd crores, PAT about 800 odd crores. You don't value these companies on a price to earning multiple, but look at the two multiples. One is the price to earning multiple, not EPS really, the PE. They're trading at over 30 times, and on a price to book, they are trading over 5.5 times. So let's just get the stocks on the screen. I mean, this is not the EPS over 30x, it's the price to earnings multiple over 30x. But what this does, what this rally does and this acquisition does is get a big piece of news out of the picture. The stock has rallied. I don't know if it can do more or no, but it certainly remains an expensive name. However, the only advantage for Adani Transmission, or one key advantage for Adani Transmission, is that the nature of the business is now looking so robust, so end-to-end, and economies of scale might just keep on getting a bit of a leg up to revenues and profitability over the course of the next 2 or 3 years. So that's probably one reason why people continue to bet on Adani Transmission. Good going for this one. Reliance Infra has had a good run. They become a net cash company. Let's wait and watch if they execute more, and whether or not people continue or will start to bet afresh on Reliance Infra. It's been a forgetful year for Reliance Infra compared to a bunch of other infra names. Can calendar year 18 reverse the fortunes? That remains the key thing. So that's the word on the large deal that got announced yesterday. Not a surprise, but just thought we'll bring viewers up to date with what it means for Adani. Now to the next story, and the risks to India's banking sector remain elevated, but maybe close to the bottom. That's according to Reserve Bank of India's financial stability report released late last evening. But according to RBI's stress test, bad loans may rise a little further. Now, Ida, the question is, how much worse can it get before it starts to get better?
Neeraj, I finally have an answer for you on that. And I actually have some good news. I know you keep complaining that you guys only bring bad news, but today there is actually good news.
Okay.
So, the FSR comes out twice a year and it tells you what they expect the banking system to do under, regular macroeconomic scenario plus stress scenarios as well. But more importantly, it gives you a slightly backward-looking view too. What came out in this time's FSR is not so much what has happened so far, because we know what has happened so far, and this chart tells you what the trajectory of bad loans has looked like, particularly for all scheduled commercial banks. You can see how you've gone in terms of gross NPAs, which is the blue line, from March 13 to September 17, where you are at 10.2% and another additional 2% in terms of stressed assets. But what was important in my view was the RBI's sort of assertion that they think we are close to a bottom. Now, bottom means we are not absolutely at the bottom. So they are saying that by September 18, you will see a slight uptick further to about a little bit above 11%. But at that stage, they do think, and they at least are calling a bottom on this bad loan problem. This is the net NPA chart, follows the same trajectory as the gross NPA chart. I just want to take you back to the last quarter's earnings numbers. And at that point, we had pointed out that the addition to gross NPAs in that quarter was the slowest in the last 8 quarters over the, over the cleanup period. And we were wondering if that suggests a bottom. Well, the Reserve Bank of India certainly thinks that does suggest a bottom. There are still risks out there, particularly if the macroeconomy is not as stable as you expect it to be. Then you could see risk emerging from, say, infrastructure sectors, power. All of those remain large concentration risks. This is just, a sense of the large industries and where stress is being concentrated. And you can see that sectors like basic materials, metals producers, where we've been talking, for months now on the kind of stress, they remain the most stressed. Engineering is highly stressed. Construction is still highly stressed. Some of the lesser stressed ones fall in this category. Mining and quarrying also under a fair amount of stress. This is just, the level of stress across major industries. The second point that they make is on large borrowers. Remember, this time around, the large borrower problem has been very extreme. And these are the gross NPA numbers across large borrowers. Actually, not the gross NPA numbers. It's telling you gross advances and gross NPAs in correlation to that. Now, again, in that scenario, they are saying that while large borrowers remain the biggest stress point, the incremental stress is starting to ease from that segment. But concentration risk still remains. So under their stress test, they said about 9 banks still have relatively high concentration risk, which essentially means that they have too much exposure to a small set of large borrowers. And if those borrowers fall under stress, then the banks automatically fall under stress as well. So they flag off that risk. On capital, and we don't have that chart up for you on the screen, but on capital, they say that 6 banks will have capital adequacy less than the regulatory minimum under the baseline macroeconomic scenario by next year. But then they go on to say that the government has announced a recapitalization plan, and that should help in a big way. So, Neeraj, nothing very dramatically new, except, according to me, the assertion or the confidence that we are close to the bottom of this problem. When we start improving, that's a separate story altogether.
It is, Ira, but if I can request you maybe stick your neck out or otherwise, could it be a 2-quarter, 3-quarter phenomenon, or is it difficult to put even that number into
well, hypothetically, it should not be more than a 3 or 4 quarter, right? Because a lot of these large stresses are in IBC, are in the Insolvency and Bankruptcy Code. There you have a very clear 270-day deadline, beyond which liquidation starts to happen. Now, the 2 bits of ambiguity there is, one, whether that 270-day deadline will hold, or due to various legal issues, it will keep getting extended. And 2, if a large proportion or some proportion of assets go into liquidation, what is the time period over which that liquidation stretches out and then you get in money? But if you assume that a large amount of them will get resolved, some sort of resolution plan will emerge under IBC, then at that 270-day mark and a little bit beyond that, you should probably get resolution for a large part of these stressed assets which make up this 10-11% gross NPA. So maybe a 4-quarter, beyond that 270-day deadline, which for at least the first 12 cases should be hit towards the March quarter, or I think maybe the June quarter. But beyond that, you should start to see those numbers come down.
And it's in the interest of the lending cycle resumption as well that these resolutions are reached quickly. I mean, recap and other things are one thing, but this needs to get resolved for the lending cycle to pick up in a meaningful way as well. Actually,
so no, those are a little divorced, because now that you have capital and if you've provisioned against these, and over and above that you have growth capital, then you can restart your lending. The problem so far, assuming that confidence is back in the banking sector, if that confidence comes back and demand for credit comes back and you've provisioned, then nothing should be holding you back.
Okay. Let's wait and watch. But thanks for putting it into perspective, Ira. We could do with some good news, certainly. The last few days, for the market's perspective, has been no news per se. But I'll tell you what's been good news for investors, maybe not so good news for people who projected these, is that while the Nifty's gained more than 27% in 2017, the highest in 3 years, a few stocks contributed more to its gain than others, which is why I said good for investors. But some of these gainers beat analyst predictions in January. And then there are others which were below par as well. So Somit Sarkar and Anirudh put together a list of Nifty outperformers and underperformers. And before we go to Somit for the names, here's a quick word on the methodology. They have shortlisted only those stocks that are currently on the Nifty and are covered by at least 10 analysts. Somit, I would have thought that most of the Nifty 50 names would be covered by at least 10 analysts.
Yeah, most of them are covered. So I'll start off with the outperformers first. See, top of the list is Bajaj Finance, which was the new inclusion on the Nifty. So on 1st Jan 2017, Bloomberg consensus analyst target price for Bajaj Finance was 952. But yesterday, Bajaj Finance closed at 1,748 rupees. That is outperforming the consensus analyst target price by 84%. Similarly, Tata Steel outperformed by 76%, Maruti Suzuki outperformed by 59%, Reliance Industries, that is the most valuable company in India, outperformed by 54%, and HUL, Hindustan Unilever, outperformed by 49%. So let's see what worked for these companies. For Bajaj Finance, it was strong growth in its asset under management because of focus on the consumer business and the superior traction coming in from the rural side also. And along with that, it was continuous and steady improvement in its asset quality. For Tata Steel, it was improving steel prices in India and Europe, and along with that, there was strong margin expansion in India business and a revamp of its Europe business, which not only included solving the pending issues and but also a new joint venture with a new company. For Maruti Suzuki, which is one of the most profitable car manufacturer globally, it was improving. It was continuous strong volume growth that the company reported in its passenger car segment and increasing market share on the back of limited competition that Maruti Suzuki faced. For Reliance Industries, which is one of the most valuable company in India, it was its telecom venture Jio, which not only grabbed good revenue market share and subscriber base, but also reported a strong financials. And along with that, it was steady performance in its core refining business. For Hindustan Unilever, it was good volume growth in market conditions where competitors were reporting decline in volumes, and along with that, it was a strong margin expansion despite input cost inflation. So now let's look at the underperformers. And there's no much surprise here because in the top 5, there are 4 pharma companies. So Lupin, analyst on the 1st Jan was expecting Lupin to have a target price for Lupin was around 1,700 rupees, but yesterday Lupin closed at 879. It underperformed the target price by 49%. Similarly, Sun Pharma underperformed by 36%, Aurobindo by 29%, Tata Motors by 27%, and Dr. Reddy's by 25%. So let's see what didn't work for these companies. For pharma companies, it was continuous pricing pressure in the US market, aggressive competition because the drugs being generic, a slowdown in its key US market, and heightened and frequent scrutiny coming in from US FDA always remained an overhang on these pharma companies. For Tata Motors, it was softening of demand in US and Europe, weak and aging product pipeline of JLR, and margin compression that happened throughout the year remained a concern for Tata Motors.
You know, Somit, I'll come to the rescue of the sell side here though for once, and a couple of points. Firstly, to the laggards list that you pointed out. Now, 4 pharma companies, and maybe you could blame that people should see the future, so on and so forth, but it's very difficult to ascertain which company would probably get impacted by the US FDA woes, and you know, Lupin was a prime example in that case. And in Tata Motors, I don't think it's only the sell side, to be honest. A clutch of buy side PMS, portfolio management services guys, still believe that because it remains one of the cheapest Nifty 50 names, it will continue to get interest. So on the underperformance,
not only because of that, Tata Motors also has few good products coming in the second half. of financial year 2018. That's the reason also they are bullish on Tata Motors.
Okay, yeah, but Jan 2017, I'm trying to think, when demonetization hit, and that's why I think even Maruti, it was right at the peak of the sentiment of demonetization, which might have impacted companies like Maruti and some of the other commercial vehicle companies as well, and maybe which is why the target prices were low. So just on that laggards list, I thought maybe I'll come to the rescue of the sell side. The gainers list, I completely agree, except for Bajaj Finance and Maruti. The others are companies in which analysts should be able to get a cycle right and predict better prices. But remember, this is no way Somit trying to say that sell side was making big mistakes. This is just data analysis of where the consensus was wrong on the leaders and the laggards list, Somit, I believe.
Yeah, exactly.
Okay, great. Thanks a lot for that, Somit. Thanks for putting that into perspective. Very interesting list, though. And I think we did a similar piece, Ira, yesterday, wherein Somit spoke about the non-Nifty 50 names and the broader markets, and that list was had variance which was dramatic. So it was very, very interesting.
Yeah, what was the top on that list? Sorry, I missed it.
It was sale.
Sale, is
Analysts were expecting the stock to go down by 27%, but it gained by around 72%.
Sale, Steel Authority of India Limited.
Yeah, exactly.
So they've got the steel cycle wrong, or the dynamics of the steel industry wrong. Thanks for that, Somit. Very, very interesting indeed. I think that's all we have on First Word, but we've got more coming up on the show.
Yeah, lots more coming up on the show. So we'll have very interesting market conversations with Dhananjay Sinha of Emkay Global Financial Services will be joining us at 9 a.m. today. And then me and Nila will get into a conversation with Bharat Iyer of JP Morgan to talk about everything, including equities. So that will be a conversation that I'm really looking forward to. But for now, what I'm looking forward to is hearing Navneet Saluja with her analysis of how the FNO setup is looking like for the day today. Navneet, good morning.
Hi, Neeraj. Good morning. Well, if you go by what happened in yesterday's session, majority of the trade was just about 10 or 15 points on the upside or downside. But what the traders have been doing this week ahead of the holiday season, they're clearly unwinding their position. And that is what we can see for the Nifty December futures. Open interest was down almost 6%. However, some increase in the premium side was seen. Premium closed at about 22 points. And similar has been the case for the Bank Nifty, where unwinding continues. So open interest there was down almost 4%, and the premium was almost 67 points. But the good news is that the volatility still remains on the lower side vis-a-vis what we were witnessing 10 days back. So the India Volatility Index is comfortably trading around the mark of 12. But in terms of option strike, what is the option band suggesting in terms of trading range? It can be 10,350 to about 10,550 on the upside. But what happened yesterday? The green bars are your call strikes. So there was some call writing seen on the 10,400 strike, whereas on the put side, we did see some addition once again coming for strikes like 10,500. And overall, also, if you go by the options data, what that is suggesting, the wide range for the market remains 10,000 to 10,500, but definitely the base has moved higher to about 10,200. So what are the institutions doing? Clearly, they're unwinding their position ahead of the holiday season. On the index futures, FIs unwound their long position. Little bit of addition was seen on the short side, but that's not too significant. Only 2,000 contracts were added. But more of unwinding was actually seen on the options front. If you could just pull up the options data, what they did yesterday, there was unwinding seen across the board. Call long, put long, call short, or be it put short. So the FIs have been unwinding their position in the recent past. In terms of stock futures, there are a lot of stocks which have come into the FNO band just 1 week ahead of the expiry. So you have Dewan Housing, GMR Infra, which was up almost 8.5%. IFCI was pretty active, 20% higher. That too has entered into the FNO band. And the other stock that we've highlighted for you is Wockhardt, which actually came out yesterday. There was so much of buying activity seen that the stock has once again gone back into the FNO band. And Reliance Communication, a counter which has gained nearly 40% in the last 2 days, saw some long positions being built up on the futures side. Back to you, Neeraj.
Well, we'll watch out for these stocks. Thanks a lot for that, Navneet. Let's get Abhijit Phatak, Director at Definet Solutions, who joins us on the show. Abhijit, can't not talk about Reliance Communications. I know there's a market at large out there, but it's lying so dormant that I want to talk about some activity first. What did you make of the 2 days of activity in ARCOM?
I mean, it's just going up, and it's difficult to see. I mean, to be honest, it's difficult to get an entry in the stock because the stop loss is so far off that it's a bit risky, especially due to the track record of the stock over the last few months. So the second thing is the lot size is very big. So taking a position in futures at these levels when it is very volatile, it's extremely risky.
Yeah, I agree. It's a trade fraught with risks. Is the trade on the index fraught with risks as well, Abhijit? It's just lying so dormant. Would you, what's the strategy that you would suggest? I also want to ask you, Abhijit, if you would, in order to eat whatever little premium might be left, would you be looking at writing some calls which you think will safely give you that money if you write those calls?
It's difficult because there is still some time, 5 days for expiry. So there might be sideways movement for maybe today and maybe Tuesday. And after that, I expect a good move, up move, and maybe a strong expiry. So writing a call today, maybe 10,500 call if one gets near 40, 45 with a stop loss of 50, which is a very tight stop loss. That is possible. Only thing is it should be near 40, 45. It closed lower yesterday. But I had recommended us selling a 10,400 straddle last 3 days back, which was at 165. Now that is at 135 now. So that was a good trade, and it is getting strangled from both sides, and even put writers are strong, the call writers are strong, and Nifty is doing nothing. But today might be a day when one can get a long opportunity if Nifty future falls near 10,400, spot. If spot comes near 10,400, one can buy a 10,400 call naked.
Okay, so if the spot comes near 10,400, then you can buy the 10,400 call. Keep that in mind. You wait for the spot to be near 10,400, and if that happens, then you buy the 10,400 December call option. Very interesting, Abhijit, that on a day when IT is in news, you are looking to go long on Hexaware.
Yes, Hexaware has been in a range of 310 to 350 futures, and it came back to the lower side of the range recently and is again showing strength. So if one can get it near 325, it can be a good long with a stop loss of 321. And it can go back towards 335 and maybe even 345 in the coming days. 335 might be intraday itself.
Okay, great. Abhijit, good having you as always. Thanks much for taking the time out, and festive greetings to you and family for this current festive season.
Thank you. Same to you.
Thank you, Abhijit. Phatak, that's his view on the derivative space. Let's take a look at the commodity markets now. Pradeep Johnson to talk about that and to take the show forward. Pradeep, good morning.
Good morning, Neeraj. So there is a little bit of profit booking at higher levels in commodities, but the uptrend remains intact. If you look at WTI prices, they traded higher on Thursday, maybe a little cool off in the early Asian trade. If you look at Britain's Fortis pipeline update that came in, didn't really dampen the sentiment for WTI, and it managed to stay strong. Brent inched towards $65. Both the benchmarks are in fact trading close to the highs that were seen in second week of this month. So strength is clearly seen in crude prices. Gold is also on course to record a second weekly gain, hovering around $1,270. Although there was some positive news for dollars coming in, the US economic data looks strong, and also on the other hand, Euro weakened a bit after that Catalonia polls, but net it didn't really affect the sentiments as far as gold prices are concerned. Even base metal is mixed. Copper slipped, but slipped from a 2-month high, so this is not really unusual. Lead has also lost around 1%. Aluminium, zinc, nickel were up, so mixed trade overall. And in early Asian trade, if you look at it, steel is trading strong by around 2%. So net trend is intact on the upside, but some profit booking ahead of holidays maybe.
Well, let's wait and watch. The equity markets too probably showing that same kind of trend, flattish, marginal upsides, maybe some profit booking ahead of the long weekend for India in particular as well. Asian markets are not showing any big cues this morning. So let's get in our fundamental expert on board to talk about the stocks which are in news, and there are a clutch of stocks which are in news today, from IT to Iyer Engineering, Whirlpool, some of the auto names. Parthiv Shah, director at TRACOM Stockbrokers, joins us right now on the show. Parthiv, good having you. Thanks much for taking the time out. What did you make of Accenture's results, upping the lower end of the guidance, and what it means for Indian IT vendors?
Good morning, Neeraj. Yes, I think the news of Accenture was extremely positive. They upped their guidance to 6 to 8%, and especially the commentary was talking about a good deal pipeline and I think good pricing power as well. And I think the entire IT sector, I think if you look at it since a very long time, it has been a lagging sector. And despite, I think, certain headwinds like the currency slightly appreciating, the higher visa cost, I think a lot of commentary coming from the Indian IT majors hasn't been that dampening. happening. And I believe that again we got very positive news coming out of TCS. They renewed their deal with Nielsen, which is a $2.3 billion deal, and I think it's going to span out in the over the next 5 years. And I think all the inroads that companies like TCS have made, especially in the digital space, they've been continuously doing all their capexes in that. So I believe even this deal will bring in a lot of digital centric revenue, which comes at a higher margin. And I think all the efforts of the past work, especially in the digital space, will bear a lot of fruits going ahead in time. Even I think companies like HCL Technologies and even Infosys, I think I believe that FY19 overall is going to be a strong year for them. And I think most of these companies, they tend to get a lot of revenue from the US markets. And I think looking at the US economy, looking at the data coming out of there, and especially the BFSI space, I think they'll definitely up their spending. A lot of deals are in the renewal space. And I think all this should bode extremely well for the Indian IT companies. And I think let's not forget, these are all companies which are cash rich. If need be for newer technologies, they can do all kinds of inorganic growth. So I think we are quite upbeat on the IT sector, contrary to the street consensus, which is not very positive. We believe, I think this is a market which does not have a lot of valuation comfort in many of the sectors. So at some point in time, especially when the FIs also tend to come back, I think this will be the sector which will be, I think one should really look forward to.
What stocks, Parthiv? I mean, one is the large cap space, which is not rallied but not showing enough growth. On the other side is the mid cap space, which has actually shown quite a bit of a rally already. What are you telling your clients to do? Which stocks to get into?
Yes, especially I think there's a lot of traction in the select mid-cap IT stocks. A couple of stocks that we really like. One is Majesco. We know that this is a product-based IT company which is focusing a lot on the insurance vertical. And the best thing to know about this company is, despite being a relatively smaller size company, targeting to do around $200 million of top line within the next couple of years, they have huge tie-up with a company like IBM. And they're using the Watson product suite, I think, which is really interesting. And besides that, recently the news which came up in terms of the tier 1 insurance that they got, I think MetLife, that really makes very good sense. That gives a lot of conviction that besides bigger companies like Guidewire, there are even these second tier companies like Majesco, which is listed in the Indian IT space, which can garner a lot more tier 1 insurance verticals contracts. So I think that can really help them scale up their revenue. And this is a company which is a classic case of increasing the top line, getting more operating leverage and getting better EBITDA margins. So I think Majesco is a company in the mid-cap IT space we are very confident about. Even I think a company like Emphasis, I think that can also do really well. I think they have good backing from Blackstone. So I think these are the names that I really like in the mid-cap IT space, and they can really tend to outperform because despite being mid-cap in nature, they are focusing on the right technologies and right verticals, because I think focusing on the right technologies is the key word for the IT sector, because the traditional IT services business, the pricing is eroding very fast. So I think these are the two companies I'd like to focus on.
Okay, so these are the stocks that Parthiv likes here. But Parthiv, what have you made out of the big announcement yesterday? Reliance Infra selling out key Mumbai business to Adani Transmission. Which of the two companies do you think really benefits, and what would be your preferred pick, if at all?
See, frankly, I think on the face of it, probably one would say it's very good news for a company like Reliance Infra, because I think whatever 20,000 crore standalone debt that they have, post this deal, I think they're talking about totally being debt free, but and focusing on the newer businesses like defense. But to be very honest, looking at this company's past capital allocation strategy, I think it has been disastrous. So I think they put up a lot of capex in the cement, they sold it off. They put a lot of capex in the road sector, they're looking to sell off that as well. Now I think the energy division and the transmission distribution division, which again they're selling off. So I think does not give a lot of confidence, despite now the balance sheet being lot stronger. And they're talking about things in defense, and especially companies like Bharat Forge, L&T took like n number of years to get their defense act together, and now they're looking at some kind of traction. I really doubt Reliance Infra, being a new player in this space, will really make huge inroads. Talking about Adani Transmission, we are extremely bullish on this counter. I think this is a classic story like what happened with Adani Ports. I think Adani Ports started with a port in Gujarat, in Mundra, and then slowly and gradually they scaled up pan-India, and geographically they are very well spread. A similar trend is happening in the transmission business, and I think it's a business with a moat. It's an annuity type of a business model. Government is now becoming becoming very flexible in giving private players a lot of work in the transmission distribution space. And Adani being a key beneficiary, because not only these assets, but also they acquired the GMR transmission distribution assets. And they're really making a good asset base in this company. And knowing how sustainable and how long-term this business is, and with very streamlined revenue flow, I think cash flows, I think Adani Transmission is a good stock to hold for the long term.
Interesting. Parthiv, we'll talk about the valuations as well of this one. Interesting analysis out there for both these counters. There are stocks beyond IT and beyond Adani and the Reliance foray, which are in news today, and our research team joins in full strength to talk about all of those. So let's talk about the key stocks in news. Let's talk about maybe a couple of brokerage notes. And CLSA has come out with a very interesting note as well, repositioning some of their positions. So let's talk about all of those with our team members. Good morning to all three of you. Darshan, let's start off with this CLSA note.
Yeah, so as you know, Chris Wood has always been very bullish on India. So he commented mainly on the elections that happened, and he said that it's happened according to what they had anticipated, that a BJP victory will come in. What he says that, it is bad news for some of the FIs who are hoping that, who are not overweight on India as much as they were, because the entire scene that was created by the media was indicating a fact that it will be, BJP probably could lose that, and they were waiting for a right opportunity, like a correction, to buy into. So that has not happened, and the Nifty has managed to rally. So that's what he's saying. Greed and fear itself is already three times overweight on India in its relative portfolio, and has 56% Indian exposure to its Asia ex-Japan long-only portfolio. They've made one change as far as their model portfolio is concerned. They have replaced ICICI Prudential with SBI Life. So the weightage that is there is almost 4%. So in their model portfolio, now CLSA has a weightage of almost 32% relating to financial and the BFSI space. So there is significant amount of traction that they see in the banking space now.
Okay. Thanks a lot for that, Darshan. To the other stocks in news, beyond Adani, beyond RCOM, which was in yesterday's news, and we discussed Accenture already, Shraddha. What else?
HDFC, that will continue, news flow continues around that one. They have they plan to sell 100% stake in two of its subsidiaries, that is HDFC Realty and HDFC Developers, and that they will sell to Quicker for a consideration of 355 crores. That apart, they'll also pick up a equity stake in Quicker that they haven't disclosed, but that should keep the stock active. Canara Bank, they've said they plan to sell 4% stake in its listed subsidiary Canfin Homes. So at the current market price, that could fetch Canara Bank close to 270 crores. More importantly, there has been significant news flow around Canfin Homes, which should keep that stock more active. Aarti Industries, they'll buy back shares at the price of 1200. Navin Fluorine, they'll be spending 115 crores to expand capacity at the Devas plant. Z Media, which has started TV news channels for UP and Uttarakhand. And lastly, a ET report which says that KT Corp and Bearing Asia are vying for Bank of Baroda's cards unit, which could fetch the bank up to 1200 crores. So nothing which will nothing that's expected to see a large move as such.
Maybe some brokerage notes then. And Agam, which is the one that stands out for you?
Well, Bajaj Corp, we have Deutsche Bank, which is increases price target on Bajaj Corp, and it's increases price target from 525 to 600, and this is after Bajaj Corp has suggested that it is going to focus on its workforce, and it is going to invest in its people, and it's recruited professionals from FMCG companies, and it's investing in sales systems and processes, and they're looking at a dividend payout of as much as 100% in FY17 as against 57% in FY12, and they expect new product launches in FY19, and this is also their top mid-cap pick in the consumer staples, which is why they maintain the buy with a price target now at 600.
Okay, so interesting. Bajaj Corp, maybe that one. Some bits about the life insurance as well, and so much more too. In a bit, our technical experts will join and we'll talk charts with them as well. But Parthiv, amongst the stocks that we spoke about, I mean, I don't know if you track Bajaj Corp individually, but if you do, what are the thoughts there?
See, I think it's a good FMCG play, and I think no doubt, despite this is a typical FMCG company which is not having plethora of businesses. I think if you go to see, they are mainly, I think, market leaders in the hair oil segment, and then they diversified into the skincare segment by acquiring the brand Nomarks. But I think the company has done extremely well. I think it's a company, if you look in terms of the balance sheet, I think the free cash flow generation is amazing. And I think I would love to see this company, I think, diversifying into more products and leverage upon its brand and the channel distribution. So I think any such plans would really make me more excited about the stock. But I think in the FMCG space, I think I prefer a peer like Jyoti Labs. I think they're doing all the right things. They have fantastic product lineup, and I think this is a company which can really scale up their businesses. Yes, I think one drawback being, I think they're not really been able to up their spending in the advertisement segment. The only reason being, I think they're more cost conscious in terms of trying to earn better margins and scale up their brands. But I think once they even start the advertisement spend, I think probably we can see a very good amount of volume growth. So I think Jyoti Labs is a company which in the mid-cap FMCG space, I believe can really give very good returns in the long term.
Okay, so Jyoti Lab is the stock which looks better than Bajaj Corp. That's the call coming from Parthiv. Our technical experts are also joining in. Vishvesh Chauhan, Head Quantitative Research for Institutional Research at Monarch Networth is with us, and also Mukesh Singh. Good morning, both of you. Mukesh, what's your take on index? Will you trade index at all or stay away from both Nifty and Bank Nifty ahead of holidays?
Good morning, Pradeep. As we can all see, the indices are dealing with the highs recorded around 7th of November. And that too, this last couple of days running from 22 till today happens to be a GAN time window. And this squaring out of price and time, and coupled with severe negative divergences across daily and weekly momentum setups does suggest that one should have an exit plan ready, at least for a leveraged position. This is not to suggest that one can go out and sell everything at the start of the day, but one should have an exit plan, and that exit plan can be in the form of a Nifty breaking below 10,370. So that's the stop on the long positions, at least on the F&O side. Ideally, I would love to see some kind of muscle flexing by key heavyweights and plus volume-led advances in majority of them, at least for today, so that we can close out this week on a very strong footing. This has been a bit of a there has been a bit of a nervousness around this 7th November high. And I would really love to see this nervousness getting shrugged off by a big powerful move today. And in that case, one can expect a move in Nifty towards 10,700 to 725.
Vishvesh, any index trading strategy that you have? Good morning.
Morning, Neeraj. See, I think yesterday also we spoke the same thing, that now you are going in a long weekend and probably the window for the FI has been closed. So whatever the event was there in terms of volatility play or either the index play is out. So most of the focus is going to be on the mid cap, and at the same time it is going to be on the F&O space, high beta. So on an index perspective, somebody who is a trader and who is wishing to make a 2-3% sort of a there, for them selling an option is always going to be strategies which is always in flavor. So my guess is that you are heading for a long weekend. Today is a Friday, so theta is going to erode very quickly. So if you remember, better part of the series we've been shorting the strangers, and we have formed some nice strategy around Gujarat election. I believe that 10,300 straddle, which is around 200 odd rupees, that is going to be a good premium, because in the next week probably we will get a 30-40 point premium, and this 200 rupees will quickly erode 200 rupees. Another thing is that the 10,400 put is catching up very quickly, and now 10,000 put may be shift towards a 10,400 put, because most of the traders will feel that this is going to be a range 400-500 for the Nifty. So this strangle is around $80, and if somebody is willing to take a bit of a risk, then in a weekend 10,400 put combined with 10,500 call, if being shorted, you'll get a net credit of $80. In my opinion, you are not likely to break either 10,300 or either 10,600. So that is going to be a good trade over the weekend.
So eat into theta, don't bother about the movement really. That's the call coming in from Vishvesh. Any particular stock that you will trade today, Vishvesh?
I think for a day, if I had to keep an eye on yesterday's session, there was a very good movement happening in a Canfin home. I'm very sure from a data perspective also it is indicating a very good movement, and I think the chart is shaping up very well. My guess is that if today it opens around the similar level to yesterday or slightly higher, than probably with a stop of below 500, I would like to go, and probably in the day it can give you a target of 530, 540.
Okay, so Canfin Homes is a pick coming in from Vishvesh. Let's just remind our viewers that the Canara Bank is planning to sell a stake in Canfin Homes, and that's the reason why this stock has been buzzing. It's in news. Mukesh, you have 2 buy calls as well.
Yeah, Pradeep. Last couple of days, we are seeing the mid caps and small caps hogging all the limelights, especially from F&O space. And my couple of ideas are also around those themes. First one is buy IDFC around 60. After many months, one can see some kind of volume action in this particular stock, and the stop is to be placed below 58 for a potential move towards 66, 67. And this other stock which I have is buy HCC. It is to be bought around 39.50, and stop is to be placed below 37, and target on the upside is seen around 45.
Okay, so these are the buying ideas coming in from Mukesh Singh. Let's move on to our feature Bloomberg Edge. Khilnani is standing by with an interesting pattern that Bloomberg Terminal has thrown up. Jayesh, which stock is on your radar, if at all?
Morning, Pradeep. I'm watching out for BEML, and fear and greed, the proprietary Bloomberg indicator, is what I'm referring to, which is suggesting a buy signal for BEML. Now, let's have a look at the fear and greed. Well, it's a spread of 2 weighted moving averages, and they are used for calculation, and it's a proprietary Bloomberg indicator which oscillates on the 0 baseline. So it becomes very simple to interpret. Positive is buy and negative is sell, which is denoted by green and red color respectively. Now, going to the chart of BEML that we have, you can see that it is also bouncing back from a very key support level. So the yellow dotted line that you see, that's the support line in the last 6 months that has been referred to, and we have seen that the price dipped actually towards that line, and from there we have seen a bounce back. And with that, what has happened is, as of yesterday's close, the fear and greed has turned positive, which indicates a healthy buy signal coming in for BEML.
And how well does this indicator work, Jesh?
Works decently well, Neeraj. The hit rate is approximately 20% for BEML.
Okay, so not the best, but watch out after a while you've seen that indicator starting to show some upticks. Let's wait and watch if it has some activity on BEML today. Thanks a lot for that, Jayesh. Parthiv, is there a fundamental case for BEML, for an investor to buy into BEML?
Yes, Neeraj. I think this stock was in the limelight, especially when the talks of the 26% strategic sale by the government was hot. And at that point in time, there were, I think, comments from many premium managements like Mr. Baba Kalyani, even L&T hinting at the fact that they would be interested in a company like this. But I think that might get delayed. But I think the stock has corrected since then. And I think we really like the fundamental story in it. I think they are into various verticals. I think not only defense, but even things like metro and many of the earth moving equipments that they make. So I think overall BEML, I think it's a fantastic asset to own. And I think balance sheet wise, the company is very strong. And I would prefer that, this company does not stay under the radar of the government. And I think there's some sort of strategic sale. And I think I'm quite confident that whenever it happens, I think it's going to be bought over by a very good institute. And I think whether it is L&T, Bharat Forge, or any other MNC play, even I'd heard Siemens and ABB type of companies were also interested in the foray. So I think any such move would really re-rate the stock further from here, irrespective of the fundamentals for the short to medium term. But I think this is a good entry point, and I believe BEML can be a good investment, especially playing the old economy theme. And I think re-emergence of the private capex and all the government spending, I think this company could be beneficiary of that.
Okay, now, I want to ask Parthiv about AI engineering as well. To my mind, this could well turn out to be the stock of the morning for the wrong reasons. But before that, Parthiv, I wanted to revisit the thesis of the Adani transmission. You are very bullish on that. The valuations don't bother you? I mean, the price to book northwards of 5.5, 6 times. I think it would probably be one of the most expensive utility names.
See, yes, I agree. I think the classic comparison would go with Power Grid. And if I look in all fundamental parameters, I think yes, Adani Transmission would look expensive on the face of it vis-a-vis Power Grid. But I think one interesting thing that I noted in these transmission distribution companies, especially when they're expanding inorganically, buying other assets, I think initially if you look at the margin profile, I think they won't be upwards of 85 to 90%, which otherwise one can expect from such assets. I think once they consolidate these assets, they tend to turn around them, and then we see a huge positive impact once the assets are consolidated, fully utilized. We see a huge positive impact in terms of the margins, and I think overall, once these assets are well in terms of the operations, the cost to run them are not very high. So I think over a period of time with good cash flows, I think such valuations could be justified, and I think it's more of a play of no other third company eating away the pie of what Power Grid or someone like Adani Transmission is built. I remember at one point in time, Sterlite Grid, I think, was leading the race in terms of the private player having such assets. But I think Adani Transmission has been very aggressive in this space, and with all the inorganic growth strategy, looking at the long-term visibility, I still believe, I think, despite the steep valuations which are looking on the face of it right now, I think they definitely can be justified once the utilization level of all the assets that they've acquired, that goes up.
Okay. PSUs have been in news. We talked about BEML earlier. Darshan told us that SBI Life is replacing ICICI Pru in Chris Wood's portfolio. But PSU banking space is in news this morning because of unrelated developments. So Canara Bank is selling stake in Canfin Homes. Bank of Baroda is selling stake in Bob Cards, and BOI is shutting down some of the ATMs, kind of rationalizing the network. What do you think? Will that really benefit? Is it enough for these PSUs to kind of compensate for the kind of provisioning they have to make, losses they have to incur on NPS?
See, Pradeep, frankly, I think if I have to compare the two pack, the private sector and the public sector, the private sector players, names like HDFC Bank, Axis Bank, ICICI Bank, RBL Bank, all have raised funds or have talked about raising funds. Even some NBFCs like Piramal Enterprises, I think they are going to raise funds of upwards of 5,000 crore. And all these funds are going to go not to clean up the ghosts of the past, but to use them in the further lending cycle growth. And that is what all these majors are envisaging. Vis-a-vis, if we look at the PSU banking sector, I think despite the news of the recap, which I think it's not going to be game changing in the short to medium term. And even till they are recapped, and even when they look about hiving of their non-core assets, I think they are just in the verge of cleaning up. They are not even talking about having a high growth trajectory going ahead. So I think still I believe that the story of the market share moving from the PSU, which I would say is at the current juncture slightly unorganized, to the organized space, which is the private sector lenders, is surely going to happen. And I think we have to be very, very selective in investing into the PSU banking space. And one stock that I believe can really do well in terms of its cleanup act, in terms of hiving of the non-core assets, and then looking at even lending growth with reasonably good spreads would be Bank of Baroda. So I think if I have to bet one stock in the PSU banking space, it would be Bank of Baroda. But otherwise, I think we are very bullish on the corporate sector lenders, especially names like Axis Bank, ICICI Bank, which are quite reasonable in terms of the valuations, and we believe max to max, I think 1 or 2 quarters post which I think we'll see good improvement in the asset quality and also in terms of the recovery. And I think operationally these banks are fantastic franchisees, so I think that will definitely help them to re-rate further.
Stocks which are in news today, by the way, we're just minutes away from pre-open session. Stocks which are in news today, amongst others, watch out for AIA Engineering, because Brazil has imposed a provisional anti-dumping duty on products out of India, and that could maybe hamper a bit of the good run that AI Engineering has been having of late. And Whirlpool, wherein Haitong has initiated coverage, they project a 36% downside. They believe the cycle is turning because of rising costs as well as rising competition, and Whirlpool may get impacted out here. I don't quite have time for a really long answer, Parthiv, but if you have thoughts on either of these two names, quick 60 seconds, either an AI Engineering on the back of the duty or Whirlpool, and the thought or the thesis that Haitong has.
See, I would definitely be a buyer on AI and any major declines due to any such negative news, because I think overall globally the commodity cycle is looking up, especially iron ore, and I think they are going to be huge in terms of the capacity. They're going to be globally #1 by next year. So I think fundamentally it's a very strong company, and I think with the global commodity cycle looking up, I'm definitely positive on it. Coming back to Whirlpool, I think I'm very positive on MNCs who are bullish on India, who are talking about even inorganic opportunities, and Whirlpool is doing that. No doubt on the face of it, the valuation looks very stretched, but looking at the company profile, looking at the MNC pedigree that this company brings, and the aggression that the management is betting about in the Indian markets, I think such valuations probably, I believe, would be justified over the longer horizon investment thesis.
Okay. Stay on, gentlemen. So much more to talk about. We'll get in some opening thoughts from Vishvesh and Mukesh as well, but this is what the Asian markets are doing. So the setup is looking flattish, if you will. The SGX Nifty is indicated a flat start any which way, so I don't think that too much of dramatics or theatrics expected at the start of the trading day. The question mark only is whether individual pockets can really move around, especially in the large cap space. The mid caps have been active yesterday too. The mid cap and the small cap indices were up about 1%. The large caps were lagging. But these are the first trades. This Friday morning, the penultimate day to the long weekend, and we have a flattish start. These rates are still a lot more active. Okay, now the Nifty is probably showing what the actual start could be like. The Sensex still about 1%. No, now the Sensex too coming off to reasonable levels. Bring up, say the HDFC twins. Okay, Adani Transmission, Reliance Infra. Let's start off with the mid caps then. Those names are in news. Reliance Infra about 1.5% higher, so the momentum continues from trade yesterday. I think we should bring up the HDFC twins and then the IT names because of the Accenture numbers. Let's bring up TCS, Infosys, HCL Technologies. Should be an interesting day of trade. The start, flattish. I don't think we'll have a 5% uptick on Infosys. Maybe HCL Tech and TCS too, a lot more sedate than what actually could be. But remember, all of these stocks have had a bit of a move yesterday. HCL Technologies was up about 2.5% yesterday. Infosys was up about 1% yesterday. Let's wait and watch if there is more in store. I just want to point out one more stock, AIA Engineering. Let's just see if there is a large negative reaction. For now, no. There's an anti-dumping duty. Let's wait and watch what happens there.
That's really interesting. The stocks moving up. Well, let's look at some more names in the mid-cap space. Stocks that are moving up. Bajaj Finance is opening higher, 2.5% in the early morning trade. So far, if you look at India Bulls Housing, that is weak. Among IT names, Tech Mahindra is a stock which is looking weak. Okay, what else have we got here? We have very little volume actually on the mid-cap side. Interestingly, in the morning trade, I saw Exide was one that was looking good. RCOM is up 5.5%. Shriram Transport up around 3%. You have Britannia, which is up around 2.5%, and MRPL has gained around 1.5%. These are some of the larger liquid mid-cap stocks, but let me tell you, volume is very low, even at these counters. Muthoot Finance correcting after yesterday's move, some correction in Page Industries and Sun Pharma Advanced Research as well. So these are some of the stocks, not big moves really this morning.
Yeah, not big news for sure. Just bring up Reliance Communication before we go on to Sumit Sarkar for the brokerage note, because the Economic Times is reporting that Chinese lenders may be in the fray to take some stake in Reliance Communications DAKC project. Also, some names like Godrej Properties, etc. have floated around. So maybe the development of that big piece of parcel of land may be around the corner, and that could keep Reliance Communications excited in trade. However, I'm sure brokerages are not talking about that. But what are they talking about? Aside of Bajaj Corp, Sumit Sarkar Johnson with the big brokerage calls for the morning.
Good morning, Neeraj. On the big brokerages, first we have is Haitong on Whirlpool of India. Now, they have initiated coverage on the stock with a sell rating and a target price of 995, which suggests a potential downside of 36%. Now, according to the brokerage, the company has high valuations at the peak of its business cycle. Now, the brokerage is expecting the favorable business cycle to now turn adverse for the company, which will impact the financials of the company. Also, increase in raw material prices and higher competitive intensity does not bode well for Whirlpool, according to Haitong. Now, they are expecting the revenue CAGR CAGR of around 10.6% over FY19 to FY20 and a 5% EPS CAGR over FY18 to FY20. Now, Haitang is also expecting reduction in demand growth to start from the second half of financial year 2018. However, when it comes to dividend, they are saying that the dividend payout would rise to 32% by financial year 2020 versus 12% in financial year 2017. This is on the back of the strong cash position that Whirlpool has. Second, we have is Motilal Oswal on Entertainment Network India. Now, they have upgraded the stock to buy from neutral but have maintained the target price at 910. Now, according to Motilal Oswal, the stock is attractive after the recent price correction that ENIL has seen. Now, they're expecting revival in ad revenue in November and December, and the brokerage is saying that the new stations that the company had deployed will break even in the fourth quarter of financial year 2018, which is a big positive for the stock. Now, Ishq station and the untapped market will also help the company maintain dominance in this market. Also, the brokerage is saying that the company will be spending around 300 crore rupees in financial year 2019 to acquire TV Today's three frequencies in three metros, that is Delhi, Mumbai and Kolkata, and on phase 3 auctions. Lastly, they're expecting the company's revenue and EBITDA to grow at a compounded annual growth rate of 15% and 29% over FY17 to FY20.
Okay, thanks a lot for that, Somit. So those are a couple of interesting names. I do think the Bajaj Corp was a fairly interesting note as well. So 2 or 3 notes that we need to watch out for. However, just 5 trading sessions left in 2017, and we at Bloomberg Quint look at the multi-baggers of the year gone by. Today we feature Goldstone Infra. The stock has run up over 7 times in a matter of 12 months. Darshan is batting by with an analysis. And Darshan, what is this company about firstly, and then what is working for the company?
Yeah, so just firstly, it's been a stellar run, 7.5%. What this company does, basically it manufactures, supplies composite insulators which are used in power transmission. So basically in the power transmission and railway, so whatever the transmission lines, there are composite composite insulators which actually connect 2 of the lines, so they are used there. But the most important trigger was the announcement when they said that they have entered into the electric bus vehicle manufacturing, and from there, the rally did really start for Goldstone Infra. So this is just a little bit of background on what this company does. Now, if you're looking at the other aspects, the return ratios, just look at the return ratios. ROA of 1.3%, ROE of 2% and ROC of almost 4%. So the return ratios are not strong. If you're looking at the PE multiple, on an average for the full year, the low was 10 times. On the average is 17 times, and currently it's trading at 45 times. So the price run up has gone up significantly, but earnings have not come in for the company. Now, if we look at the other parameters of the company, you can clearly know the financials, what exactly is happening. Now, basically look at this. 75% of this is what I'm talking about, is the second quarter because they launched the bus there. 75% of the revenue comes in from the insulator business and 25% of the revenue comes in from the electric bus vehicle. But when it comes to actual profitability, 95% of the profitability is from the insulator business and only 5% profitability comes in from the electric bus vehicle. So currently at that point of time, they're not making enough as far as this bus is concerned. Now look at the revenues. The revenues have been pretty stagnant from 92 crores to 105 crores from FY17. They moved 62 crores in the first half, which means they will do almost 120, 130 crores. That is only because of the electric bus vehicle that they have launched. But the same is not reflected on the EPS. The EPS has moved from 1.4 to 1.7. But in the first half, when the revenues grew so much, the EPS didn't grow that much. So even if you annualize this, they will do an EPS which is pretty much less than that. And even look at the margins. The margins have come down to almost 14%, given the fact there is a significant amount of cost of materials have gone up significantly. Debt of 69 crores and cash of 11 crores on the book, so not significant here. As far as debt they had to take because of the electric vehicle launch that they had done. Now just look at the 4 quarters gone by, and you can see in the 4th quarter the revenues that they did was 40 crores. Apart from it, it's been pretty stagnant between 20 and 30 crores. And look at the EPS also. So despite having such a big revenue, they're not able to actually get much on the bottom line at this point of time. So basically it was the electric bus phase and the electric vehicle craze that actually moved the counter up significantly. So what worked in the favor? The electric vehicle foray. They got orders from BEST as well as HRTC. The other important factor which caused the rally was that a 50 lakh warrants was allotted to the promoters in October, and at the same time 1.4 crore shares were allotted to non-promoters in October. So this was done at levels of 80 to 90 when the stock price was 100. Post that there seems to be significant amount of traction. So these two things worked. First of all, the entry into electric vehicle and the launch of the electrical vehicle bus when the entire Tesla, Tesla hoop, everything was up. Tesla, everything relating to Tesla was doing well. What are the risks here? The valuations have run up significantly post the electric vehicle entry, and imports from China in the insulator business is something that can dent earnings for them. So basically what we are saying is that the run up has been significant because of the promoter warrants as well as the company infusion and the electrical bucks. So but now we need to see whether they will actually be able to be, this electric bus vehicle will be actually adding to the profitability of the company or no. It's no doubt adding to the revenues, but valuations seem to be too rich. But the rally has been stellar, almost 7.5 times.
Okay. Just wondering, Darshan, very quickly, the volumes aren't the best here, and if it does 1.5 rupees or 2 rupees of EPS at 208, 209, it's not cheap stock.
It is not. It is not. So currently it's trading at 45 times. The lowest 10 times when it was stagnating at this time. So pretty much here is where the move. The October is where they announced the warrants to the promoters, and post that it's been just a one-way rally. And probably August or something, the electric vehicle foray came in with Tesla coming out with their buses and the entire the world going gaga over electric vehicles. That is where the rally actually started.
Okay. Thanks for that, Darshan. Remember, this is no way any kind of recommendation, more an analysis of companies that have done really well, and we try and bring you the pros and cons of each of these names. 9:10, before we get in Vishvesh Chauhan's thoughts on some stocks that are moving around, just mark the indices as the pre-open rates have settled down. It's a flattish start that the Nifty is indicating, so we'll have a start which is flattish. The question mark is whether individual stocks can do well. Let's tell you all that you need to know in terms of specific stocks to stay ahead in trade today. IT stocks will remain in focus as Accenture raises FY18 guidance to 6 to 8% from a 5 to 8% earlier.
HDFC to sell 100% stake in HDFC Developers, and HDFC Realty to quicken.
AI engineering in focus as Brazil imposes a provisional anti-dumping duty on products from India.
Haitong initiates coverage on Whirlpool with a sell and sets a price target of 995 rupees, which is a downside of around 36%.
Canara Bank plans to sell 4% stake in Canfin Homes to hold 26% stake post the sale.
And Madison Sumi promoter sells 1.4% stake in company, while Tirumalai Chemicals ups stake in ultramarine pigments.
Okay, Vishvesh, I just wanted to ask a question to you. If you're looking at an IT stock for a trade today, is there one that is in the offing?
I think, Neeraj, a while back, IT was in radar, and particularly we've been very vocal on the stocks like KPIT, Hexaware, and Mindtree. But if I had to look at now, then probably in yesterday's session, what interesting thing would have been happened, but it happened to be a very low liquid in spite of the fact that it is in futures. It's in Oracle Finance. So yesterday there was some good traction happening. But I think when I would like to recommend, I'm not recommending from an immediate gain, but if somebody is willing to hold it, then in my opinion, KPIT around 175 makes a very good case for a 10 to 15% of the move until the start of the next expiry. So first week of Jan till you could expect a 10 to 15% move. So somebody who is willing to bet risky footage like futures in the KPIT may want to take a Jan futures with stop below 167, 166, and probably may expect a target of 190 odd on a KPIT.
Okay, thanks a lot for that. By the way, just a couple of stocks that I want to mark. DB Realty, Pradeep, is up another 20% in the session today. So big move there. I don't know what a Unitech or a Sun TV are doing today, but DB Realty is certainly up and about. Bring up Unitech about a couple of percentage points higher. Bring up Sun TV as well. And aside of Sun, remember, it might be very, very risky to trade some of these names as well. So be mindful of that. Before we get in the top idea from Vishvesh, just one more question on GVK Infra, Vishvesh. 4% higher again today. 17.5, good day of trade yesterday due for all these infra names. Is there a trade in GVK?
See, I think from Neeraj, from a very short-term perspective, we can definitely, try to find out the trade, because from the levels of the April around a $4-5 right now, it is trading almost at a 17. So my guess is that how much more? Now, apparently, ever since 2011, the stock has never been able to move about 20 rupees. So yeah, you could argue that the stock may have still upside till 20, but I would be very, very skeptical in picking up a stock like that, because I don't have a clue like what is the fundamental shape of the company. But I think the upside can be for the 20 rupees for the day. My sense is that the stock can face a 17 rupees 20 paisa as a resistance. But in an infra space, we have a very, very good stock, Sadbhav Engineering. I would like to mention, probably this is the stock I would like to recommend, not only short term but from a medium term perspective. It is breaking out of a 2-3 year consolidation, and right now our research team says that it is trading at a barely 11 times EBITDA. So that gives a lot of comfort in terms of buying the price. So probably on a back of an infra push by the government and a huge demand for the roads, I think this stock is very well poised technically as well as fundamental. So probably I would want to suggest that this is the one stock where you would also like to keep an eye, Sadbhav Engineering.
Okay, but is that your topic for the day as well, or you would like to recommend something else, Vishvesh, quickly in 10 seconds?
No, for the day also, I think, because after a 5 days, 7 days of a sideways consolidation, yesterday's stock was 6-7% up, and towards the end it came down a little bit around a 398. So my guess is that stock has a potential to move till 410-15 for the day. So in a cash for the today also, somebody was so like to buy with a stop of 390, one can buy. Target could be of the 415 on the higher side.
Okay, Vishwesh, thanks a lot for that. Sadbhav Engineering top call, but this is what the markets are doing at open. The Nifty 50 flat, Sensex flat, the Nifty Bank 2 flat. The mid caps and the small caps, those should come up, because yesterday a chalk and cheese performance between the mid caps and the large caps. So about 1/3%, not a bad start for the mid caps and the small caps. Now get the Nifty heat map and show you. I would presume there will be a fair bit of green on the screen. Yes, there is, but no big movers. You can see the top gainer is up less than 1%. The top loser, HCL Technologies, is down less than 1%. So it's a fairly muted start that we have for almost all the key stocks on the Nifty 50 at least. And the IT names, yes, they're up and about. TCS is amongst the top gainers, but no big moves really. Let's get a sense of some of the top movers and some of the newsmakers in the session today and what they could be doing in trade. So start off with IT, naturally so, because that's the large cap space in focus, but no big bang reaction to Accenture's numbers. Guidance up, good quarter. Maybe the stocks have already taken it in their stride. So no big moves for the IT names in the session today. Let's move on and talk about some of the other names, some of the other newsmakers as well. Brazil has hiked the anti-dumping duty on products that AI Engineering, amongst others, manufacturers, but no, the stock is not showing a big reaction downwards. Let's see if there's a reaction downwards for Whirlpool. No. The bear call from Haitong, 36% downside. But anyways, as I said, Haitong is not really that big brokerage call with a mass following, wherein people would have gone out and shorted or exited the stock. Maybe we'll try and speak to the management about the concerns that the brokerage has put out. And promoters stake sale. So Canara Bank might sell about 4% stake in Canfin Homes, but even this one is lying muted. I'm drawing a bit of a blank here, Pradeep. None of the newsmakers are moving around. Are you spotting anything which is moving around?
Yeah, so you have Religare Enterprises, which is up 3%, but not at this circuit like we had seen over the last few days, so that's significant. Alembic continues to move up. Yesterday also we spotted in last hour of trade is up 4.5%. DB Realty that Neeraj mentioned earlier is at 20% circuit, locked at that circuit level even today. Vascon Engineering, another stock that we spotted yesterday, is up 4.5%. Aditya Birla Money has moved up by around 11%. Vinyl Chemical is a small cap that has moved up in today's trade, up 5.5%. And some more stocks which are moving with good volume. On mobile, maybe up around 2%. Banco Product, this one is up around 3% with good volume.
Well, on the Nifty 200 to Reliance Infra seems to be doing okay. Reliance Communications. I just want to mark Adani Transmission as well. So 3 stocks that just quickly want to mark. Reliance Infra, Adani Transmission and Reliance Communications. And those 3 stocks, interesting moves out there for them. Bharat Industries, amongst others, up about 5%. But let's get in a special guest on the show, Dhananjay Sinha, Head of Research, Economist and Markets at Emkay Global Financial Services, joins us on the show with his thoughts on the markets. Dhananjay, good having you. Thanks so much for taking the time out. What's your sense, Dhananjay? I'm asking you to wear a bit of a trading hat and try and tell us if the next few days could be fairly sedate because of the holiday season?
Yeah, I think that's quite clear. I think the market has done fairly well. The rally has been pretty strong. I mean, see, the thing is that we'll have to see what the momentum is going forward. The indications that we are basically looking at is what the government's going to do. You have an upcoming budget. What is the flavor that it will carry? I think those are the things that will dominate the market sentiment in the coming months. So that's where the focus will be. So let's look at the budget actually, and I think you had a supplementary grant that the supplementary demand that the government has actually raised with respect to additional spending. That also is giving us a flavor of the things that will sort of pan out. I think budget and what the government does in the next year will be dominating factor over the next 1.5 years, at least till the next election.
So it's mainly the capex and rural focused themes that people are talking about. Do you also concur with that idea? Have you started playing or started recommending stocks based on these themes?
So I think with respect to capex, I think there is some enthusiasm that has come around that private capex will start happening. Our thesis is that it is still somewhat early. If you look at the inflection points that typically exist during an upturn in an investment cycle, private capex, I think that those are still not there. So if you look at the general enthusiasm is that you have cash flow that is happening for companies, and hence that will motivate them to actually invest. Our study has shown that first of all, the capex that companies do is largely led by external borrowing rather than internal cash flow or operating cash flow. We have also seen that improvement in cash flow from betterment in sales growth is not translating into margins or earnings. So I think the return ratios on investments or equity has to really improve before investment take place. Also, we have said that domestic savings rates had not really picked up, so you can't have a sustainable a scenario of a sustainable investment cycle going forward. So I think that is something that we are somewhat cautious about in terms of the enthusiasm that people are showing. My sense is that the cycle will be largely led by consumption theme, with a larger focus of the government on rural, agri, enhancement of disposable income. So all these things are relevant. So if you look at the supplementary demand that the government came up with last week, you see a significant allocation for NREGA, for instance. There is almost like an additional 8,000 crores worth of allocation there. There is something like 3,000 crores allocation for Saubhagya, which is rural electrification. So we have various indications which shows that government is actually moving in this direction. So I think farm sector, loan waiver, allocation for NREGA, seventh pay commission, all these things are going to have a sort of and retail lending. I think all these things will have a very strong impulse on the consumption demand. So we are looking at stocks and sectors which are within this space, and I think this is and also following the Gujarat election, the response has been somewhat reflationary and somewhat populist. So I think that is the theme. So if you look at, we have been positive on FMCG names, and some of the stocks have done very well over the last 1 year. Durables is something that we think can actually outperform quite significantly over the next 12 to 18 months' time, as disposable income improvement and robust retail lending translates into better demand. So two-wheelers, again, we have been talking about Hero Motors, tractors, farm equipment, etc. And of course the private sector banks. Yeah.
True. Now I want to ask about some specific pockets out here, Dhananjay, because you've given us a whole encompassing answer of what all in the broader theme do you like. I'm looking at some spaces which are in news. There is a large deal that has happened possibly you and I both will now be receiving power from the Adani Group as opposed to the Reliance Group in a few months from now. What did you make of this deal, and what does it mean from a sector perspective as well? We now starting to see consolidation, a lot of large players starting to buy out assets and consolidating their positions. What do you guys at Emkay like within this pocket? It could be infrastructure, it could be transmission and distribution, or otherwise.
So I think transmission and distribution is something that we like, because I think this whole electricity for all theme is something that the government would want to play. So transmission is a space that we have been bullish about. So there are good amount of government orders that are coming around. So we have picked up certain stocks, and we have recently started initiation on some of the stocks. Things such as skippers is an example. We have started we started initiation there. So that's a stock, and that's an area that we are looking at from the power distribution space.
Okay, but actually the stock that you like in Adani Group is Adani Port.
Yeah, so that's on the logistics side. I think over there, I think because of the improvement in consolidation and improvement in the trade numbers, I think the utilization is improving. So that is a stock that we have been within the port coverage we have liked. Yeah.
Okay, so Adani Port is the stock in this group that you prefer at this point of time. Dhananjay, we have seen a lot of movement in some of the PSU names, BEML on the defense side. We saw Dredging Corporation moving up the other day. We saw MTNL, ITI moving up. Do you like any of these plays? Do you think, whatever capex plan that government has going forward, will these PSUs play a key role and therefore can be bought?
So I think one has seen that there is a good amount of allocation to defense, and also BML has certain component of that. There can be some activity with respect to mining as well, because the steel space is actually doing well. So I think BML might be a candidate, but I would also be circumspect, because the enthusiasm with respect to larger government capex is also a sort of contingent upon certain fiscal management, and we believe that the shortfall with respect to revenue collection and the allocation of the supplementary demand would imply that there is a slippage on the fiscal side. So it is possible that there is a curtailment in capital outlay going forward, and we believe that in FY18 itself there will be a contraction of about 2.5–3% when we end the year, and in the following year also we believe that there will be larger allocation for revenue spending. So I would not really extrapolate beyond certain specific sectors such as defense.
Dhananjay, what's the dark horse for 2018? I'm just looking at one of the themes that you guys have spoken about. I remember a couple of companies I think got featured in the Emkay Global Conference as well that we covered too. Specialty chemicals. Now, what's the thesis here? Can these stocks, which have already had a bit of a run, show the earnings growth which can propel them higher in calendar year 18, calendar year 19? And if so, what do you like within this pocket?
So I think the theme for the specialty chemical is an intermediate product that will be there. I think the key theme for next year will be consumer durables and autos, and private lenders. I think that will be the bigger component, delta creator as far as market capitalization is concerned. So we are looking at things such as Voltas, for instance, which is a consumer durable, which AC manufacturer, which is actually moving into household, appliances, and something like Bajaj Electric is another stock that we have been sort of pushing. We believe Hero Motors can actually do very well with a betterment in volume and also market share. Within the thing is that if you look at a cyclical upturn in credit growth is what we are looking at from level system-wide level of 5%. The credit growth has already come up to 8%. We are targeting about 13% this year end, and the following year about 14 or 15% can happen. So there is a upturn as far as business for lenders are concerned, and we believe that private lenders such as all the private lenders, HDFC is planning to raise a huge amount of money. They will be able to leverage. Smaller banks such as IndusInd is also getting proactive with respect to core banking and non-fee-based income. Then we look at even the corporate lenders. I think there is upturn that we have identified value in ICICI Bank, for instance. It has been doing well. There is a possibility that is gradually becoming a consensus view now. I think the fundraising that has been done by Axis Bank is something that will propel that stock going forward also, and also their business. I mean, they have moved even if we consider considerable amount of write-off on the stressed asset, they still have a good amount of unimpaired tier 1 capital at somewhere around 11% or thereabout to grow. So they have a growth capital, and with the recent fundraising that they have done, they will be able to grow. So that is a whole area that we are looking at. From
companies that have been raising growth capital from the market.
We think that
we talked about Adani earlier, but what does this deal do to the over-leveraged ADAG group? Do you like stocks like Reliance Capital or Reliance Infra, which do have a solid business? I know you won't fundamentally like Reliance Communications, but these two.
No, we don't have coverage on that, so I would not like to comment on these names at this juncture. Yeah.
Okay. So Dhananjay, before we wrap up, if consumption is your pet theme and you're talking about consumer durables, etc., just one quick thought on which economy-facing bucket do you think can do really well?
Which economy facing? I've just told that. I think I would say banking sector, private lenders can do reasonably well, and that is well.
Okay, I was just wondering, because you outlined 2 or 3 things, if you can just narrow it down, which is amongst your personal favorites, an economy facing bucket that you think can do really well?
As I said, consumer is something that I would look to buy, and there are names that I have mentioned that I have been buying, and I have been recommending as well. And lenders I have mentioned about those. Metal stocks can continue to do well. So these are again economy facing sectors.
Okay, fair call. Dhananjay, really appreciate you taking the time out today. There's a bit of a lag here, but still enjoyed the conversation. Thank you so much for taking the time out, and to you and your team, best wishes for a festive season.
Thank you. Thank you.
That's Dhananjay Sinha of Emkay Global with his thoughts on the markets. And the markets are lying absolutely flat. No great moves really from the Nifty Bank either. Mid caps and the small caps slightly more active than what the large caps are doing. The small cap index in particular. But while it may have been a year of multi-baggers, can calendar year 18 do the same? We discuss markets, macros and valuations with a very special guest. Bharat Iyer of JP Morgan India joins in on the other side of the break. Stay tuned.
Are we live? To programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Just business news, we're news for business people.
Back with Indian Open right here on Bloomberg. Quint, the mid caps and the small caps seem to be doing well, much better than the large caps, at least for the day today. Though you could argue that that's been the case for the month as well. And within the broader end of the spectrum, watch out for infrastructure. That seems to be the pocket that is doing really well. HCC is up 10%. Adani Transmission has reasons of its own, of course, and Reliance Infra has reasons of its own. GVK Power is up 5%. And I saw a couple of other names like Dilip Buildcon amongst others, which seem to be doing okay. So not a bad day, not a bad year. It's been a great year for Indian equities, in fact. The question mark is only if the cheer can continue into the next year, both on the macros and the micros, with so many domestic events also set to take center stage. Let's pose that question to a very special guest. Bharat Iyer of JP Morgan, needs no introduction, joins us right now on the show to talk about all of that and more. Bharat, good having you. Thanks so much for taking the time out. Will the party continue into 2018?
I think it depends on what you define as the party. Our base case is that you could make another 10% in Indian equities next year. I mean, can we repeat the showing of 2017? We'd like it to happen, but difficult to predict that at this stage.
Yeah, but would you even like it to happen? I mean, almost everybody that we speak to speak about valuations looking so stretched that maybe a correction would actually be healthy for the markets.
No, correction at any point in time is good because markets always build up some kind of froth, and it's always good to get rid of it earlier than later. But that said, I don't think we're in obscenely valued territory at this point in time. I think yes, valuations are a tad stretched. We are at the higher end of the historic trading spectrum, one standard deviation higher than mean at 19 times. But that said, I mean, we've touched 24 times in the past, at least on 2 or 3 occasions. So 19 better than 24.
And the guy who's skeptical about this whole skepticism on valuation would argue the same thing, that when we've touched those obscene valuations, we were at the peak of the earnings cycle. Right now, we are not there, and in all probability, earnings could actually revive meaningfully in calendar year 18. So what's your thesis, your individual thesis? Do you think earnings pick up and then continue to move or trend higher over the next couple of years at least? And does that give a floor to the valuations?
See, Neeraj, the way I look at it is, we're trading at 19 times. I really don't think there's too much scope for further re-rating on the valuation front.
On the valuation front.
Because, let's face it, valuations were driven by 2 factors. I mean, one was very easy global liquidity and easy monetary policy by central banks in the developed world. That seems to largely be coming to an end. And we've already seen some kind of normalization, at least with some central banks. So I think that variable is out of the way. Secondly, even if you look at it in the local context, I think we saw a very meaningful improvement in local variables, including the fiscal account, the current account, inflation. I think most of that improvement has peaked. And near term, we could see some mean reversion. And even here, I think, we're largely done with monetary easing. So I think, here onwards, the heavy lifting will have to be done by earnings rather than valuations. On earnings, our take really is that we still think street earnings are a little frothy. For FY18, the street is at about 13-14%. I think for the first half, we ended flat. So I think, the second half, then we'll have to do 25% plus, which looks unlikely at this stage. So I think 8 to 10% is more like it. And for next year, again, the state is at 23-24%. We think it'll be more like 14-15%. But that said, yes. I mean, have we bottomed out and are we going to see a bit of improvement in the trend? Yes.
Bharat, so the process of global monetary policy normalization started this year, actually, in some ways, right? Why is the assumption being made that next year is the year when it will start to bite? Is it because the Fed's balance sheet reduction, sort of moves along? Is it that ECB is expected to join in? Because the BOJ will not.
Yes. I think, it's a combination of factors, Ira. I think what's going to happen is, as you rightly pointed out, central bankers in the developed world were just wetting their feet, if I may use that expression, in terms of normalization this year. Whereas next year, we do expect that this process will gain momentum. I mean, we've seen 2-3 rate hikes so far in the US over a period of 2 years. Next year, our house view is that we'll see 4 rate hikes, though the market at this point in time is pricing in only 2. Yes, as you said, the pace of, balance sheet normalization is, gathering momentum. The ECB will at some point in time join the same stance next year, and the BOE is probably already there. Again, we're seeing something similar from the PBOC. And so I think, with the exception of the BOJ, yes, everyone seems to be moving the other way. And I think, the key data point to watch out for is, how core inflation pans out. Because, we're getting there, and, inflation, as we all know, is a bit of a hockey stick phenomena. And, you just hope and pray that things are normal.
So you do think that fund flows will start to look a little bit softer next year? They haven't been great this year into equities, at least. They've been great into debt.
Yeah, they've been great into debt. But again, let's face it, we still got $8 to $10 billion. Yeah. And if you compare it versus the last 2 years when we were averaging only $4-5 billion, yes, a far cry from the $20 billion we were making between 2000 and 2014 and so on. Yeah. But yes, I mean, we definitely need to watch out for that. That is an important variable.
Interesting. So, Bharat, what goes out faster? Because I remember conversations start of this year wherein most people believed, and I don't know what your belief was, that equity flows were but a derivative of the kind of strong flows that were coming into the debt market. If you indeed believe that debt market flows also will not be that strong, are we to presume that this spate of outflows that we've seen from the equity markets, save for November, could actually accelerate? And people would argue there are factors for that with the rate hike, and maybe the US tax reforms also aids to that process. What is your core belief?
See, I think, it's always difficult to predict flows, Neeraj. I mean, if you ask me honestly, I mean, I've been trying to do it every year for a few years, and, I've just realized it's a mug's game. I've always got it wrong.
You've given up.
So, it take me with a lot of skepticism. But I think, at the start of the year, the base case would still be like, I mean, we do have, an internal model that throws out numbers. And, the base case we have right now is that we continue to get about $8 to $10 billion into Indian equities next year as well. Because, obviously, as you said, the global macro situation will get more challenging as we go into the year. But that said, the initial part of the year should still be, quite healthy and reasonable. Secondly, also, I guess fund flows are a function of, some bottom-up stories as well. I mean, even this year we saw, we had a spate of outflows for 3 or 4 months, and then we had this very high-profile IPO, a high-quality IPO, and then it attracted a lot of attention. So, you have to make allowances for that as well. Okay. So, yes, the base case is 8 to 10 billion, more front-ended rather than back-ended, but let's see.
Okay, and part 2 of my question would be, are we now, as a market, reaching a point or have already reached a point wherein the global flows will not really determine or dictate what happens to levels and sentiment? Because the locals are coming there. The conversations, and you would have had too, when we've spoken to fund managers and we talk about what will happen if indeed the rates go up and the flows go out, almost everybody has said, hum hai na. We will come in and park in the money because we believe that the flows are here to stay.
See, Neeraj, I'll answer that question in 2 parts. I think, first and foremost, the development that you're alluding to is a very positive development. Because, let's face it, the Indian household is underinvested in equities. And, this is a structural trend. It's not a cyclical trend. So, you will see more and more money coming in, and which is good. Because, you want the household to make better money than the debt markets can give them. There is a tax advantage out there. And also, I guess, it's positive for both the markets and the economy because it enables us to de-risk a little from global happenings. But that said, I mean, are we going to be immune to a global sell down just because, local investors have become relatively more powerful? Unlikely. Look at the math. I mean, you have the FIIs own what, 22% of Indian equities? The locals, including the Life Insurance Corporation, own 11, 12%, and the LIC is half of that. So, and keeping them aside because they tend to have various considerations. I mean, 5 versus 22.
Yeah. And the other point, sir, is, I mean, I know I hate to be the voice of skepticism, and we all hope that the domestic sort of, flows continue, but we don't know that they will continue until you hit a down cycle.
True. Absolutely, you're very right, Ira, because, there are 2-3 issues here. I mean, which is what even it's a point even we like to make, that, if you're getting, say, $2 billion into equities every month, I mean, all of it is not structural. I mean, you could argue that, about 800 million is structural, about 1.2 billion is cyclical. And, it's not that the local investor is just going to keep investing in equities at all levels.
Yeah.
I mean, this is a very smart investor. Let's face it, between 2012 and 2014, 15, the local investor, stayed away from equities or the financial markets at large, invested in debt, invested in real estate and property and gold when inflation was going up, did very well. At the right minute, made the switch into the debt markets.
Yeah.
At the right minute, made the switch into the equity markets. So, and the relative attraction of debt is on the margin going up. I mean, the 10-year bond has gone up by 80 basis points in the last 4 months. So, I mean, yes, that's why, as I said, there is a structural component to it, there's a cyclical component to it. The structural perhaps endures and stays. The cyclical component will have its ups and downs.
Okay. I thought you would have started off with a question
macro?
on banking. No, fine. Maybe
okay, since you've given me the opening, what is the underlying assumption on macros for next year and how that changes, the way you look at the market as well? So, I mean, we're going from a low inflation to a high inflation scenario. That has its implications for where you want to put your money. Potentially, we're going into a slight modest, as the RBI governor called it, a modest uptick in the investment cycle.
Yes, I think I would agree with that. I think, on the margin, I think, growth will go up a little bit. I mean, will it go up to beyond, say, 7.5, 8? I don't think so. But, we are aggregating about 6.3, 6.5%. Can that, tend towards the 7% mark or thereabouts? I mean, give or take 20 basis points? Yes. Because let's face it, we've had 2 serious supply side disruptions over the last 12, 13 months. And, both of them will make their way out of the system. And so I guess, initially, there will be some kind of mean reversion. In terms of the future, I think it really depends on, what kind of fiscal space these exercises throw up. I mean, at some point, you would expect them to throw up some fiscal space which can be used to pump prime the economy. But the timing is a little uncertain at this point.
Okay, but would they say, markets start to look a little bit more favorably at the, not core infrastructure, but maybe the ancillaries of infrastructure a little bit?
See, our take on this has been that, look, I mean, at this point in time, there are limited degrees of freedom to pump prime the economy. I think on the monetary side, I think it's largely consensus now that, we're not going to see much happening for some time to come, given the way the inflation trajectory is panning out. On the fiscal side, again, because of these disruptions we've had, I mean, there is limited space to do much. And, what we've seen is, to be fair to the government, they've really not spread themselves thin. They are focusing on 3 or 4 areas, roads and highways, power transmission, affordable housing, defense. So, do we see them continuing to push the initiatives here? And, does that give a leg up to growth? Yes. So I think, it's going to be a limited recovery in that sense. Do we see a broad-based recovery? Not at this stage, because if you see overall utilization levels in the economy are still 75%. Sure. So, I mean, until you cross 85% decisively, I don't think anyone's going to be in a hurry. So we're looking for I would agree with you, we will see a selective recovery. We are perhaps seeing a selective recovery, but it's still not time for a
But consumer over investment still in that
consumer
sense.
and select pockets of investment.
Okay.
Yeah, but the markets would probably like to price in something that is not happening or that is not already on the anvil, right? You want to buy into something that will probably happen 6 months down the line because it will be available cheap. Are economy-facing pockets giving you that opportunity?
Selectively, I don't think they're giving you an opportunity where, you can pick something up where a recovery is 6 months down the line. I mean, given the kind of liquidity we have, I think, those stories are all priced in.
Priced in? You think infrastructure is priced in?
I think, again, if you're looking at anything which is going to recover in 6 months' time, it's priced in my opinion. What is not priced in is where the recovery is 18 months away.
And which would be?
Which would be, I mean, see, there are select infrastructure developers. I mean, if you see, I mean, you have, the large state-owned infrastructure developers, right? Most of them are trading at very reasonable multiples. I mean, they've had a good run. It's not that you can't make another 10-15% per annum again from here onwards with them.
Sure.
But, they're not cheap, as, Whereas if you look at some of the private sector infrastructure developers, where perhaps a turnaround or balance sheet problems being alleviated, or some kind of value unleashing strategies being implemented, there I think if you're willing to look past 6 months, if you're willing to look at 18 months, I think there is value.
So. Would you believe that value now is in identifying pockets which will continue to grow at 20-25%, because the growth coming in at a valuation which is sub 10 times is just not there. So then therefore you find value in growth.
I think that's always going to be the case in a market like India.
More so now?
I think I think you have to really look at your investment strategy in a couple of different buckets. So there is obviously the value bucket which you and I were just discussing right now. But that said, I guess also in India you have this advantage where you have these stories which may be overtly expensive in terms of valuation multiples. But the good part about them is that they are going to be compounding at 20-25% for the next 3-5 years, either because there is a market opportunity or because they have the ability to take share from a relatively weak system. And if that's going to happen, then I mean it goes on. It's like the retail private sector banks, for example. Look, I mean, when you look at them in terms of valuations and you say, hey, 3 times book, 4 times book, or 15 times, 18 times earnings, you say, aren't they expensive? But these
perennially expensive.
They're going to be expensive because they have that compounding opportunity.
Speaking of financials, since you brought it up, so are you at all willing to take a bet on PSU banks on the assumption that there could be there is already recapitalization, but that could be followed by some sort of reform?
I would selectively be willing to take that bet, Ira. But what we have to appreciate is, look, recapitalization sorts out the issue of resolution capital.
Yes.
But for them to be competitive in the marketplace, one, they will need growth capital. And when they go to investors asking growth capital, I think they're going to be asked the right questions. How are you going to sort out your processes and systems so that this kind of mess doesn't happen again? How are you going to compete in the new marketplace? I mean, in terms of digital banking for retail customers or sophisticated derivative products for corporate customers and so on and so forth. And all of them may not be able to give the right answers. Yep. Some will not be able to. And those who can give the right questions, is there an investment opportunity there? Yes. But I wouldn't say it's a broad-based opportunity. It's a selective opportunity for those who can make that leap.
And you have to get the right picks, because there's no way of knowing, which banks the government will pick to push,
Exactly, and which is where, you need to, spend a fair bit of time assessing the managements, as you would in most companies anyway, and figuring out, who has the ability to, really make it to the next level.
Where do you stand on this NBFC story? I mean, again, there was much excitement, and we used to debate it all the time as to whether it's justified or not. Where do you stand on that?
See, I think, they had a very good opportunity, both on the asset side and the liability side. I mean, most of them tend to be wholesale borrowers. Yeah. So, a falling interest rate regime was very favorable for them. And then, you had the state-owned banks in particular completely distracted with credit cycle issues. And so there was a huge disintermediation opportunity. So now, on the margin, both these drivers are, if anything, receding.
Right. Yeah.
Right? Interest rates are on the way back up, and, the state-owned banks will start pushing back. So I think, you're going to, I'm not saying, they're all going to fare badly. But this was a rising tide which lifted all boats. Okay. Whereas what's going to happen is now you'll have to differentiate the men from the boys.
That's very interesting. Does this whole recapitalization stroke growth capital, assuming that all the QIPs are successful and they get enough money over the course of the next 6 months to fund the next leg of growth, set the stage beautifully for road developers? The reason I ask this to you specifically is because if I scan the 5 or 6 year-ender notes that have come out, non-JP Morgan, almost everybody is bullish on the road construction pocket. They believe Bharatmala will give this order book flips, which we haven't seen for a while now. I'm not saying you're not bullish, but I'm saying the others are definitely bullish.
We are bullish too. I mean, Neeraj, if anything, like for more than 2 years now, I mean, we've been sounding like a stuck record on this, saying that, look, I mean, don't get carried away with a broad-based investment cycle recovery. The government's very clearly focusing on these 4 or 5 areas, and so these will do well. And roads is definitely one of the areas where the data is trending in the right direction. You can see that very clearly. So I mean, we are believers in that story.
Okay, so that's one pocket. The non-economy facing consumption has had a great run, and I'm not talking about staples, but the non-staples consumption has also had a fabulous move, more so on the stock markets than maybe what the actual businesses have shown. Is there a case for a pause, or do you believe that 15, 20 or 10, 15, 20% growth might continue?
See, Neeraj, my take on this is that consumption in India will do well. I mean, given the demographics that you have, and urban probably more than rural, because urbanization is another trend that will just keep gathering.
Even post Gujarat, that's your view.
Even we're looking at structural trends. We're not looking at near-term tactical moves. So I guess consumption. I mean, there's a case to be made that consumption will grow at about 7-8% every year in volume terms, and if that happens, earnings can compound at 12 to 15%. There's no reason to believe that that will not happen. I guess the challenge when investing in that sector really is valuations, because what has really happened is, globally there was this chase for yield, right? And what happened was that in India, this particular thesis manifested itself in money chasing consumption stocks.
True.
Because we don't have a technology sector, at least not the kind of technology sector that has done well in the last 2 years. And so I guess it's a question of valuations. I mean, where do you find pockets where there is still value, and where people have defendable moats, and where you have valuations which are outright frothy and where they don't have defendable moats.
So is it more bottom up, or is it?
It is more bottom.
It's more bottom up.
It is more bottom up because top down everyone knows the story. It's been priced in, and if anything, I mean, investors have been very generous in the way it's been priced in. So you need to find moats which can sustain competitive positions and which can continue to grow.
What are the risks, Bharat, that are not priced in at a big picture level? Could it be a change in the government's thinking? Could it be interest rate hikes sooner than which is being factored in? What could it be domestically?
See, I think, if you ask me, I mean, sorry to digress, but I still think the bigger risk to markets, if you ask me, is global rather than local. Okay. Because, while we do need to focus on the local story, let's face it, I mean, 2017, the run in the markets was largely global. I mean, emerging markets went up 30%. India did more or less in line. But even the big global developed markets did 20% plus. So, I mean, and all this was, this was all underpinned by easy liquidity and easy monetary policy. So that has been the key driver of markets, because let's face it, in the last 5 years, earnings growth has aggregated mid-single digit. So I think, that's still the key risk to watch out for. From a local risk point, yes, I mean, I would certainly be worried with this discord that we are seeing increasingly over the last 3-4 months between the bond markets and the equity markets. That, the bond markets seem to be suggesting that, there are domestic stresses building up, either on the fiscal front or the inflation front, or a combination, whereas equity markets have stayed quite immune to that. And while we do appreciate that equity markets are more driven by global factors, given that they're relatively more open, whereas bond markets are more locally driven because they're not so open, the fact is this is a discord that you can't see going on forever. At some point there's going to be mean reversion. So either the bond market gives up its worries and you see a big rally there, or the equity markets play ball, because if these higher levels of interest rates are sustained, then I mean, it is also going to have an impact on growth. Okay. So yes, I mean, one needs to this is one feature which one needs to focus on.
You were mentioning offline, sorry, Neeraj, I don't mean to dominate the conversation. You were mentioning offline about this whole stressed asset resolution. How do the equity markets look at this? I mean, from a macro level, we can look at it in various aspects, but how would you look at it?
See, I think the equity markets have been quite sensible in the way they've gone about, looking at this whole issue. They have been concerned about it on a structural basis, which explains the underperformance of the corporate and the state-owned banks vis-a-vis the retail private sector banks for some time now. And I guess, when the resolution capital was provided, that was priced in very swiftly, in almost 5 minutes, if I may.
Yes.
And after that, again, the markets now cooled off. The froth has, come down. And the markets are saying, okay, now, let's go through the resolution process. It's going to be
not from the perspective of banks. What about from the perspective of the industries involved, like steel, for instance? There could be massive reorganization in the ownership of steel in 12 to 24 months.
There could be. But, Ira, we'll have to appreciate that, steel is a global business. So I guess, the reason steel stocks have done well, and they've been doing well for some time now, I think since late 2015, is because globally, I mean, metals have had a good run, particularly steel. So I guess, it's difficult to, start pricing in consolidation gains beyond a point because, let's face it, we still need to go through the process and it is going to be a long winding process. And secondly, even if you have consolidation, given where, it's an open economy, given where, import duties are, etc., you have to focus on the global picture rather than the local picture.
Sure. Okay. 10-second answer, Bharat. Are you looking at biting into Bitcoin?
I really don't have a strong view on that. I've never looked at that asset class.
It's just been off 20% in the last 5 days. I thought you never know. People might be excited enough for Bitcoins as well. But Bharat, take a moment to thank you for joining us today on IndianOpen, and great having you.
Thank you so much for coming in.
And have a great new year as well. Well, the markets will they have a good new year? I don't know, but they certainly seem to be having a good Christmas Eve from a market's perspective, the last trading day before we hit Christmas. Mid caps and the small caps doing a lot better than the large caps, but hey, the large caps are also in the green, which is what matters. But we call it a day on this leg of Indian Open, at least from Ida and me and the team that put the show together. Thank you so much for watching. The FNO show takes forward the action on the other side.